go to Caroline Woods at the New York Stock Exchange, where we're going to talk China numbers. So we got some delivery figures out. Caroline, what's going on? Take us through them, because it seems like the China EVs are doing pretty well this morning.
Hey there, Oliver. Yes, these June delivery figures for the Chinese EV makers are showing some signs of improvement, and that's translating to some green arrows across the board.
Volatile, impressive, and potential. Today, electric vehicle stocks are surging thanks to Volkswagen's plan to invest up to $5 billion in Rivan, an electric truck startup. This news is causing a market rally, even lifting struggling electric vehicle stocks like NIO. For the past month, NIO has been in a downward spiral, unable to gain any lasting traction. However, today, NIO's stock is climbing steadily, boosted by the Rivan effect. According to Finviz, JP Morgan recently upped its rating on NIO's stock from underweight to neutral as of May 15, 2024. On the other hand, Barclays downgraded the stock from equal weight to underweight and set a price target of $4. Similarly, on March 25, 2024, Mizuho cut its rating from buy to neutral and lowered the price target to $5.50. Will NIO's stock continue its rise, or is this just a temporary spike? As of July 2, 2024, analysts at Momu have given NIO a hold rating, suggesting the stock might climb to $6.14, nearly a 38.29% increase. This projection hints at a potential significant upswing for NIO. But remember, these are just predictions. While these projections give hope, it's crucial for investors to look beyond the ratings. You must check NIO's financial health, follow industry trends, and grasp the broader market conditions. Will NIO's potential for growth outweigh the risks it currently faces? Share your insights and comment down below. If you found this update useful, like and subscribe for more investing tips. NIO's stock price has seen some wild swings. It has dipped 1.35% over the last 5 sessions and 8.96% in the past 30 trades. This marks a significant drop from earlier in the year. The share price has fallen by 47.29% in the past 6 months, with an 11% drop in just the last 3 months. NIO's stock is 8.3% below the 20-day, 8.87% below the 50-day, and 33.18% below the 200-day simple moving average prices. As trading ended, NIO, part of the consumer cyclical sector, is down 72.99% from its 52-week high but up 21.05% from its 52-week low. This high-low range offers a clearer picture of where the stock might be heading. NIO's weighted alpha stands at -63.01, signaling significant declines. On the profitability side, things look rough. The operating margin is -42.59% and the profit margin is -39.55%. The gross margin is slightly positive at 6.13%. Profit margin, which compares net income to sales, is a key indicator of how well the company converts revenue into profit. The higher the number, the better the profitability. On the other hand, NIO's current market capitalization is a little over $9 billion, which measures the company's overall market value. Its forward price-to-earnings ratio is based on expected earnings for the next financial year. NIO has a price-to-sales ratio of 1.10, indicating how much investors pay for each dollar of sales, and a price-to-book ratio of 3.19, comparing the stock's market value to its book value. Furthermore, most investors prefer shares held by company management, believing they are more likely to act in the shareholders' best interests. Only 0.01% of NIO's shares are owned by insiders and 18.1% by financial institutions.
All right, we up 4.3% right now, and then NIO actually beat analyst expectations, up 3.6% on news that it delivered about 21,200 vehicles in June. That was an increase of 98.1% year over year. It was also a monthly record. It was the second consecutive monthly record for NIO.
Shares of NIO surged after the Chinese electric vehicle maker and its competitors posted strong delivery numbers for June and the second quarter. This positive data also boosted Tesla's shares, which are on track for their longest winning streak in a year, with its sales figures coming soon. NIO reported delivering 21,209 vehicles in June, a 98.1% jump from the same month last year. This included 11,581 SUVs and 9,628 sedans. For the entire second quarter, NIO delivered 57,373 vehicles, an impressive 143.9% increase from the previous year. Following this news, NIO's stock rose 2.9%, recovering after a 10.3% drop over the past days. Li Auto also saw significant growth, reporting 47,774 electric vehicle deliveries in June, a 46.7% rise from last year. Li delivered 108,581 electric vehicles for the second quarter, up 25.5%.
NIO has signed battery swapping agreements with well-known car companies such as Chang'an and Geely, as well as state-owned energy and power companies. Do you think it's a sign of positive acknowledgement towards your persistence on battery swapping?
事实上，这个确实换电是非常适合中国的用户场景的一个体系的创新。
Battery swapping is very suitable for Chinese users because most of China's urban families live in apartments. It's relatively difficult for them to install chargers at home. Their time costs of recharging is high. However, battery swapping can give them an experience similar to filling up a traditional gas tank. It's very convenient.
Investor Plays Lewis Naval Eye claims NIO's path hasn't really changed, and the stock is still stuck in the penny stock range. The big buzz around NIO is its upcoming small car, Firefly. CEO William Li announced that Firefly won't work with current NIO battery swap stations. Because of its compact design, it will use new, smaller swap stations with coffee bars. This new car will be priced between $14,000 and $28,000. NIO's third brand, onvo, can only use the fourth-generation NIO swap stations that opened in June. In addition, NIO faces a new 21% tariff in Europe, which will force it to debut Firefly in China first and delay exports to Europe. At the start of the year, NIO had planned a big export push due to fierce competition at home. Now, let's analyze NIO stock more. Understanding a company's financial health is crucial for any investor. One key metric to assess this is the current ratio. We will delve into NIO's current ratio, its significance, and what it tells us about its short-term financial position. The current ratio is a liquidity metric that assesses a company's ability to meet its short-term obligations within a year. It uses current assets like cash, inventory, and accounts receivable to gauge this capability. It indicates how much a company can cover its current debts with its readily available resources. The data presented showed a current ratio of 1.15 for NIO. This suggests that for every $1 of current liabilities, NIO has $1.15 in current assets. This might seem good, implying NIO has enough resources to settle its short-term debts. However, a deeper analysis is necessary. A generally accepted rule of thumb suggests a current ratio between 1.5 and 3 indicates good short-term liquidity. A below-standard ratio might raise concerns about a company's ability to pay its liabilities. Conversely, a very high ratio could indicate inefficient resource use, with companies holding onto too much cash instead of investing in growth opportunities. On the other hand, gross margin measures a company's ability to generate profit from its core business activities. It represents the percentage of revenue remaining after accounting for the cost of goods sold. It simply shows how much money NIO makes after covering the variable costs directly associated with producing and selling its electric vehicles. The information presented highlights NIO's gross margin for the quarter ending the first quarter of 2024 at 4.92%. While a single data point offers a glimpse, a more insightful analysis requires examining the trend over time. The information presented also reveals a fluctuating gross margin for NIO throughout 2023 and the first quarter of 2024. Investors should look for additional information from NIO's financial statements or press releases to understand the reasons behind the margin and current ratio changes. NIO stock has shown a rollercoaster performance. Despite a recent boost from Volkswagen's Rivan investment, NIO is struggling to find steady ground. The stock's brief rise today brings some hope, but its recent downward trend and mixed analyst ratings paint a complicated picture. But despite all of that, June and second quarter delivery numbers were impressive, sparking a 2.9% rise in stock price. But then NIO's new small car, Firefly, and the challenges posed by tariffs in Europe add layers of uncertainty. Can NIO turn its recent gains into a long-term comeback, or are these ups just brief reliefs in a challenging market? Share your insights in the comments below. If you enjoyed this video, you might also like our hand-picked, action-packed newsletter about NIO. Subscribe now at wiseinvesting.com. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you want to know about NIO stock, just click this video here. Thank you for tuning in, and stay tuned for more exciting content in the future.